Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll be discussing one question on profit reconciliation statement where different methods of depreciation are used in financial book and cost book. Let us read the question. Following is the profit and loss account of Anubhav Manufacturing Company for the year ended 31st December 2013. Opening stock of raw material 60,000, work in progress 35,000, finished goods 80,000. If we think from cost book point of view, raw material will be part of direct materials. Work in progress, we have to add in factory overheads, gross works cost. Finished goods, it will be added to cost of production. Purchases, this is purchase of direct material 2,40,000. Factory wages means as per cost book it will be direct labor. Electricity charges, factory overheads. Sales, it will be same as per cost book. Closing stock of raw material, from direct material we are required to deduct this. Work in progress, it will be deducted from gross works cost to arrive at net factory cost. Finished goods, we have to deduct from cost of production. Administrative expenses, administration overheads. Selling and distribution expenses, selling overheads. Bad debts, it will not be recorded in cost sheet. Miscellaneous income, it will not be recorded in cost sheet. Their cost account shows profit of 2,81,750. On scrutiny of their costing profit and loss account, it was found that their opening stock and closing stock were valued as under. Opening stock of raw material will be part of direct material 80,000. Work in progress, this will be added to gross works cost. Finished goods, cost of production. Closing stock of raw material, we have to deduct from direct material. Work in progress will be deducted from gross works cost. Finished goods, it will be deducted from cost of production. They charge administrative expenses 18,000. This is administration overheads as per cost book. Selling and distribution expenses 1,27,000. The selling overheads as per cost book. They had charged depreciation at 25% on written down value method on its plant which was purchased on 1st July 2010 for rupees 80,000. In financial account, however, the depreciation was provided on straight line method and the same was included in factory overheads of rupees 90,000. Prepare statement reconciling the difference in profits as disclosed by two records. So here we have different methods of depreciation. So we are required to first understand what difference it will bring to profit because of charging of depreciation under two different methods in two different set of books. Plant was purchased on 1st July 2010. It was purchased for rupees 80,000. As per financial book, we have charged depreciation on the basis of straight line method at the rate of 25%. So it is purchased on 1st July. So from July to March, we have to charge depreciation. So it will be July to December, that is for 6 months. It will be rupees 10,000. So return down value on 1st January 2011 is rupees 70,000. Now depreciation for full year 2011, it will be on straight line basis, so it will be calculated on original cost. So it will be 20,000. So on 1st January 2012, return down value will be 50,000. Depreciation for 2012, again 20,000. So on 1st January 13, value is 20,000. Now depreciation for the current year 2013, it will be 20,000. So this is WDV as on 31st December 2013. This is the value we are required to consider here for reconciliation purpose, that current year depreciation is 20,000. Let us see now depreciation as per cost book, where there is a use of WDV method. 80,000 minus 6 months depreciation will be same figure. $70,000. Now here depreciation will be charged on 70,000, 25%. It will be 17,500. Depreciation for 2012, 13,125. For current year 2013, depreciation is 9,844. So we have to compare depreciation as per straight line method. It is 20,000 in financial book and depreciation 9,844 as per cost book. Let us prepare working note to fix the signs whether the particular item to be added or subtracted in profit reconciliation statement. Opening stock of raw material 60,000 as per financial book. In cost book, opening stock of raw material is 80,000. Opening stock of work in progress 35,000 as per financial book. As per cost book, work in progress opening stock is 40,000. Finished goods as per profit and loss account 80,000. As per cost book, finished goods 60,000. As per cost book, administrative expenses 18,000. As per financial book, administrative expenses 25,000. Selling and distribution expenses as per cost book 1,27,000. As per financial book, selling and distribution expenses 1,15,000. Difference of depreciation. In financial book it is 20,000. In cost book as per our working note 9,844. As per financial book factory overheads are 90,000. They have said that it includes the amount of depreciation. So other factory overheads 90,000 minus 20,000, it is 70,000. In case of cost book, other factory overheads will be 80,156. Bad debts 30,000. It is recorded only in financial book. Electricity charges, it can be treated as direct expense in both the books, 66,000. Now miscellaneous income 20,000. It's an income which is recorded only in financial book. Closing stock of raw material 60,000 as per financial book. As per cost book, closing stock of raw material 70,000. Work in progress as per financial book closing 41,000. Closing work in progress as per cost book 44,000. Finished goods as per cost book 20,000. As per financial book it is 30,000. Continue. We have recorded all the items of difference. Now from first column amount we will be deducting the amounts of second column. Opening stock of raw material 60,000 as per financial book. As per cost book it is 80,000. 60 minus 80, it will be minus 20,000. So in profit reconciliation statement this item has to be deducted. Work in progress 35,000 minus 40,000 minus 5,000. Finished goods 80,000, 60,000 minus 20,000. Administration expenses 25,000 minus 18,000. This will be plus 7,000. Selling and distribution expenses 1,15,000, 1,27,000, 1,27,000. So that will be deducted minus 12,000. Depreciation on plant 20,000, 9,844. So it will be plus 10,156. Other factory overheads 70,000 minus 80,156. So it will be minus 10,156. Bad debts 30,000 minus 0. So it will be plus 30,000. Now income. In case of income we are required to reverse the sign. Closing stock of miscellaneous income 20,000 minus 0. So it should be plus 20,000. But we have to reverse the sign in case of income. So it will be minus. Closing stock of raw material 60,000 minus 70,000. It will be minus 10,000. It will be taken plus. Work in progress 41,000 minus 44,000. So it will be minus 3,000. It will be taken plus 3,000. Finished goods 30,000 minus 20,000 plus 10,000. So it will be taken minus 10,000. We have to start with profit as per financial book. It is net profit as per financial book 2,70,000. To this we are going to add the items which are having plus sign. Admin expenses plus 7,000. Depreciation on plant plus 10,156. Bad debts plus 30,000. Closing stock of raw material plus 10,000. Closing stock of work in progress plus 3,000. Now we'll be subtracting the items having negative signs. Opening stock of raw material minus 20,000. Opening stock of work in progress minus 5,000. Opening stock of finished goods, it is plus 20,000. Selling and distribution expenses minus 12,000. Other factory overheads 10,156. Miscellaneous income 20,000. Closing stock of finished goods 10,000. Finally, we should arrive at profit as per cost book. After adding plus items and deducting negative items, we have arrived at profit as per cost book 2,81,750. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.